Thank you, Hemendra, for your keynote speech. I hope everyone enjoyed the speech and learned something about India. Now we are here for a panel discussion on India. We have with us one venture capital investor, one entrepreneur, and one portfolio manager. So we'll hear the perspectives of three different people from three different stages in the entire AgTech value chain in India. At first, I'd like to introduce you to Mark Kahn. He is a venture partner at Omnivore Ventures. Mark is an undergrad from University of Pennsylvania and an MBA from Harvard Business School, and he makes investments in India, and he's based out of Mumbai. And we have Anurag Agarwal, who is the co-founder of New Leaf Dynamic Technologies, a startup that is disrupting the cold chain sector in India. Anurag is an alumni of IIT Kanpur in India and University of Tennessee. And then we have Ganesh. Ganesh is the portfolio manager at Social Alpha, which makes a lot of investments in the AgTech sector. Ganesh is an alumni of IIT Madras in India. So we will start with Mark, and then we'll move to Anurag and Ganesh. So handing over to you, Mark. And please let me know when you share your slides.
Absolutely. It's a pleasure to be here. As was just said, I'm the managing partner at Omnivore, and I'll share a couple slides here today as we discuss AgriTech in India. I need to be able to share this. Not quite working. Okay, there we go.
You can share it now.
Got it. One sec. All right. Is this one sec? Can you guys see this?
Yeah, we can see your screen.
Great. Wonderful. So Omnivore is a venture capital firm based in India, which funds entrepreneurs building the future of agriculture and food systems. We are the oldest and the largest agri-tech-focused fund in India. Originally got started in 2010, launched formally in 2011, raised our first fund in 12 and 13, and have been at it ever since. So we help to pioneer this space, and it's a pleasure to kind of share some of our learnings with everyone today. So Omnivore's theory of change, what drives us as we look at transforming food systems and increasing agricultural prosperity across India, we really see three major challenges that are out there. One is increasing smallholder farmer profitability, right? That's very distinct from productivity. I hate when people talk about 10 billion people and feeding the world. It's all bullshit, okay? What really needs to happen is a radical increase in the profitability, in the income levels of farmers so that they can survive, so that they can thrive. And we look at doing that through raising farm yields, yes, but also reducing farm expenditures and securing better prices for farm outputs. The second thing we look at are agri-tech startups that are enhancing smallholder farmer resilience. It's not just about increasing the bottom line of a farmer's income statement, but it's also about providing access to innovative finance, risk management, steady or augmented sources of income, and improved market dynamics. And finally, improving agricultural sustainability, right? Which may not be at the smallholder level. It might be at the systemic level. And that's about reducing consumption of natural resources and minimizing wastage and spoilage. So everything that we invest in falls into one of these three buckets of our drivers of change. There are 9 major themes that we focus on, which you can see here. And if I were to kind of move farmer platforms, rural fintech, agribusiness SaaS, precision ag, B2B marketplaces, farm to consumer brands, agri-biotech, innovative foods, and post-harvest technologies. One thing, Hemendra may have addressed this as well, is the space of agri-tech investing has increased dramatically. This is data from Omnivore Ag Funder Traction and Crunchbase. We've gone from about $17 million invested in core agri-tech in the year of April 13 to March 14, the Indian financial year. This year, we crossed 225 mil as of the middle of the year. We're crunching the numbers right now, and I think it's close to 300. So there's been an incredible, 64% CAGR growth of agri-tech investing in India. But it's not even, and it's not spread out equally. So if we were to break down where that spending goes, right? about half of it, right? A huge amount of it. Sorry, a little more goes in, about 250 million goes into B2B agri marketplaces. This is a general VC investment theme of SME B2B marketplaces. This is the agri part of it, and this is where the largest checks have been written, in particular to NinjaCart and Waycool. Right below that, farm to consumer brands with 180 million, like Licious and Country Delight. Farmer platforms like AgroStar and Dehat have also managed to receive significant funding, and rural fintech, specifically Samunati, but some other players like Gramcover, have done well. Then we have a category of post-harvest tech, agribusiness SaaS, and precision agriculture. This is the deep tech category of Indian agri-tech, and together that's only about, it's a little less than 100 mil. And here you see players like Stellaps and IntelloLabs, Croppin and Skymet, Fussell and Tartan Sense. And finally, we'll talk a bit about life sciences. So as I was saying, B2B agri marketplaces, these are sourcing from farmers, selling to kirana shops, modern retailers, hotels, restaurants, caterers, food processors. Not a lot of hotels, restaurants, caterers working right now, but you've got a sense of some of the players here. Farm to consumer brands have the farmer on one side, the consumer on the other, and whether it's FMCG, CPG products like Wycook and Vadam, or delivery systems like Fresh to Home, Licious, and Country Delight, these are disintermediating between the farmer and the end consumer in a very powerful way. Farmer platforms, what does that mean? They're digital marketplaces, and farmers can buy inputs, access credit or insurance, rent farm machinery. Some of them also, facilitate market linkages. Increasingly, especially in the COVID era, market linkages are very, very important. And many of them, most of them, provide advisory services, though they aren't monetized. And finally, rural fintech. Financial inclusion is one of the great challenges for Indian farmers and agribusiness companies. And most of these players are financing the value chain, some of them individual farmers. The biggest player here is Samunati, Arya for warehouse finance, Bijak for commodity finance, for trading finance, Jai Kisan for farmer finance, and Gramcover for insurance. In the deep tech space, right, we break down between post-harvest technologies, agribusiness, SaaS, and precision agriculture. Post-harvest is looking at midstream, right? So you've got players like Stellaps that are digitizing dairy, IntelloLabs that are digitizing quality and fresh produce. Ecozen is post-harvest cold storage. AgNext is digital quality and traceability. I think they presented. In agribusiness SaaS, you have players like Croppin, Procol, and Skymet. These are B2B software solutions for agribusiness companies. Sometimes it's ERP, sometimes it's weather forecasting, sometimes it's remote sensing. Precision agriculture, this is actually on-farm. And here you have players like Fussell with on-farm sensors, Tartan Sense with on-farm robots, and Eruvaka with IoT for aquaculture. Agri-life sciences is a glaring gap in the Indian agri-tech ecosystem. There is almost, forget about funding, there's almost no funding for either agri-biotech or innovative foods, but there's also no deal flow. Right? If I can point to funded companies that have received more than $1 million, you've got String Bio and Barracks and almost nothing else. And so there's a very clear innovation gap here that needs to be resolved. And, the government of India spends quite a bit of time trying to prime the pump of the startup sector. And I think the life sciences challenge is where the most attention is needed. Innovative foods is just beginning to come up, and there are some interesting players. And the ecosystem now is very, very powerful. You really have, when we started, there was nothing. There was kind of us, there was Vilgro, very little else. Today, you have a tremendous number of pre-seed players and accelerators, a lot of seed check writers, Series A check writers, and even Series B check writers. So the ecosystem's come a long way. Just want to give you a sense of some of the stuff that Omnivore is investing in, some of our recent deals. AgNext is presenting at this event, so I won't go too much into it, but AgNext is bringing digital quality and traceability to commodity value chains. They've started with tea, they're working in grains, and they're working with some of the largest commodity trading companies in the world to bring full visibility, full quality across that value chain. Tartan Sense is, well, there you go, agri-robotics. They are building the world's least expensive agri-robot. It's focused on see and spray in the cotton crop for herbicide. So looking at radically reducing the amount of herbicide that is used for control of cotton, and bringing a holistic weed control solution that also removes tremendous amounts of labor that's used in weed control on farms. Founded by a team of Carnegie Mellon folks, just like every other robotic startup in the world, except ours are in Bangalore. Dehat is probably the largest farmer platform in India right now. They have about 400,000 farmers. And again, it's like I said earlier, farmers are buying inputs, farmers are receiving market linkages for selling outputs, farmers are receiving financing and advisory. Sequoia just invested along with FMO. We're very excited about what these guys are doing, specifically focused on states in Eastern India that are among the poorest in the country. IntelloLabs is another post-harvest technology that we've supported recently. Going to have an announcement there very soon, a very positive one. They have scaled globally. So they are a very good example of how Indian startups oftentimes start out solving local problems and tackle global problems. They are applying digital technologies, including computer vision, machine learning, but also IoT, spectrometry, everything, to radically changing the way quality is tracked throughout fresh produce supply chains. So IntelloLabs totally focused on fruits and vegetables, working right now in India, in China, in Thailand. Thank God for some of that East Asian stuff, because those economies are getting back online very quickly. AquaConnect is the largest platform for aquaculture farmers in Asia. It's combining a SaaS tool for farm management in which any hardware can plug into with an omni-channel marketplace. And so essentially, India has 50,000 shrimp farmers. They produce $5 billion of exports. It's one of the most modern value chains in Indian agribusiness. These guys are working with shrimp farmers. They're working with fish farmers. They're also working outside of India in places like Indonesia and scaling very, very rapidly. So looking at transforming the way aquaculture works in Asia. Fussell is a team that is focused on really the top few percentage of Indian farmers. So we've got 130 million farmers in India. We've got about 10 million hectares of drip irrigation that's farmed by a much smaller number of farmers, maybe 8 million, maybe 7 million. Fussell is focused on those guys, that top few percentage that are in horticulture, that are in export-oriented horticulture, high-value horticulture, and they're bringing on-farm IoT with SaaS and combining it with algorithms to enable farmers to radically improve their profitability and sustainability. And finally, Bijak. Bijak is a company that is looking at digitizing the trade in agricultural commodities and financing the trade in agricultural commodities in India. Just raised a $12 million round led by RTP Global. Fantastic technical team. They came out of one AgTech startup that didn't work out, formed a new one, and they've been growing probably faster than any AgTech startup in India. So that's an example of the kind of stuff Omnivore is investing in. Very happy to take any questions.
Thank you so much, Mark. We have one question from the audience right now, but we'll keep the Q&A for the end. And sure. So we have heard from a leading investor now. Let's hear what an entrepreneur has to say about AgTech in India. So Anurag, I'll hand it over to you now.
Yes. So can you share my screen, please?
Yeah, you can share it.
I can share it. Okay. So my screen is just frozen. Whew.
Probably we will have speaking then, and then in the meantime you can fix your screen, and then you can go after that.
Okay. Yeah. So good afternoon. I'm Anurag Agarwal from New Leaf Dynamic Technologies. New Leaf has developed Green Chill. Green Chill is a refrigeration system that is powered by farm waste. And so typically in India, we waste about 30 to 40% of our harvest. That really amounts to $40 billion annually because of lack of cold chain infrastructure, and also because of lack of the storage infrastructure or the cold storage infrastructure. The farmers lose earnings, they lose their harvest because the prices are the lowest when it's about harvest time and when the production is minimum. And so the produce cannot be stored, so the prices are minimized. So again, if all this produce has to be cooled using conventional refrigeration systems, India is going to need about 25% more grid power. And so that really means about 550 million tons of carbon emissions annually. So New Leaf has developed Green Chill. So Green Chill is a refrigeration system that is powered by any kind of biomass, any loose biomass like husk, like rice husk, wheat husk, straw, mustard husk, groundnut shells, stems of various plants and pulses, leaves, even cow dung cakes. The consumption is minimal. It's about 60 to 80 kilograms a day of biomass. The system can reach minus 2 degrees centigrade with full humidity control. We can store about 20 metric tons of produce, and the system can load up to about 5 metric tons of new produce a day and keep it cold. So these systems are typically used for cold storages. These are also used for ripening. These are used for ripening bananas, ripening mangoes, ripening papaya. On the farm, it is also used for pre-cooling, used for running bulk milk chillers at milk collection centers in villages and farms. So very recently, we have come out a version of Green Chill, which can also, with this version of Green Chill, we can dry, while the produce is being cooled, and drying at low temperature gives us a very, very good quality of drying. Green Chill has about 30 installations across the country, spread across the country. And these installations are at farmers' fields. Currently, with these 30 installations, we've had a revenue of about $1 million. Most of these systems are financed by banks. These are either leased out by banks or financed by banks. Our installations are generally in clusters. So we focus in districts, and we have multiple installations in these districts from where we are able to supply or to provide market linkages to our cold rooms. So these clusters are set up in Junagadh in Gujarat and in Neemuch and Mandsaur in Madhya Pradesh. Also, with these 30 installations, the cost of the systems are coming down, and the B2B segment is now really opening up, and this really provides a base to get in a large number of systems installed. So, our business plan is that as the number of systems are increasing, the price of is decreasing rapidly. And currently, the pricing of the system is less than $15,000 for a 15 metric ton system. That includes the cold room of the system. The company has attracted a capital of about 27 million Indian rupees. These are grants that has been mobilized for about 27 million Indian rupees, and we have raised commercial capital of 25 million rupees. We have orders in pipeline for about 40 million rupees. Typically, our installations are in villages towards farmers, and typically a farmer can store flowers, for example, before a festive season. The flowers could be selling into the market for 8 rupees a kilo, and 2 weeks later, 3 weeks later, these marigold flowers could be selling at about 50 to 60 rupees a kilo, and the farmer can increase his earnings and profits by 5 to 10 times by storing up these flowers for a couple of weeks. Another commodity that is very commonly stored in our cold rooms is lemon. Lemon has 2 to 3 harvests a year. During harvest time, the price of lemon is about 10 to 12 rupees a kilo, and 3 months later, the price could be 60 rupees a kilo. Also, being able to store lemon and inside these small cold rooms, it gives access to the retail market to the farmer storing these commodities. So these commodities are normally stored in 20 kilogram bins, and storing them in 20 kilogram bins means that these can be sold out to retails, to semi-retail market. Uh, Another commodity that's very commonly used in our cold rooms is ripening of bananas. And typically, a batch of bananas can be ripened every 4 days. So when you ripen bananas, you can increase the revenue from 10 rupees a kilogram to about 20 rupees a kilogram uh, within a period of 3 to 4 days. So you can double up your revenue by just ripening bananas and ripening mangoes. So typically, all these installations have been made in the Indian villages. These installations are spread across the country. And at the moment, we are now expanding out into the business to business market. And in the next phase, the company is looking at raising a capital of about 1.2 million US dollars. Thank you.
Thank you, Anurag. So there was a good perspective from an agri-tech startup in India. Now I'll hand it over to Ganesh for the next 5 minutes, and then we'll have the last 15 minutes for question and answers with all the 3 panel members. So Ganesh.
Great. I hope I'm audible. Yeah, you can hear me, right?
Yep, we can hear you.
Thanks, Avinash. So, hi everyone. Thanks for the introduction. I am a portfolio manager at Social Alpha. It's a technology business incubator, an initiative of Government of India and Tata Trust. And we have offerings like pilot beds, implementation partners, product development facilities, DFM firms, business and technical mentorship for early stage startups. Apart from the fact that being an incubator, we provide spaces in various cities for a soft landing of any startup that is going to come to India or even starting up over here. We mainly incubate startups and provide seed stage investments as well on a case to case basis that demonstrate impact, strong societal or environmental impact with business models that are sustainable and scalable. And we have a special predilection for deep tech startups. So one sector in India that requires urgent intervention across supply chain is of course agriculture. This can be very clearly inferred from the fact that agri sector employs currently 58% of the working population in India, while contributing less than 20% of the gross domestic product. On one hand, food demands remain unfulfilled due to distribution and supply issues for a growing middle class, while on the other, the ag sector is unable to sustain the pressures of dependent workforce on the supply side. There are numerous untapped business opportunities in India, which, in spite of contributing to only 1/5 of the GDP, is still a $300 billion industry. This has led to a proliferation of startups and new businesses in this sector. This is in spite of the fact that financing remains difficult to come by, mainly due to the traditional nature of the industry and incredible pressures inherent in the system right now. Broadly speaking, the thesis that we have in agriculture is divided into two main buckets. First ones are the ones addressing pre-harvest segment on the supply side, which would include increasing production or yield, reducing input costs, or providing appropriate farm advisories to mitigate a farmer's risk. Although the biggest challenge being observed in this particular bucket is that to achieve scale, the primary user segment today remains the farmer. The Indian farmer typically has about two-thirds of Indian farmers, rather, have less than 2 hectares of land holding size, and the annual income is still lower than $2,000. This translates into a very low willingness to pay, and also a big challenge because startups have to acquire new customers or users, for that matter, in order to scale their innovation. However, these barriers can be mitigated by a startup through a B2B strategy that bundles these innovations with existing products or services, which have considerable traction on the ground. Say, for example, a telecom internet service provider, or integrating your solution with an input supplier like fertilizer or pumps, etc. That many startups on this particular segment are kind of getting on into, and investors also feel quite a lot de-risked using these supply chains rather than going directly to farmers, which definitely would provide more impact and better understanding of the users, but is very difficult to achieve. The other way, of course, is to collaborate with an intermediary organization. This has been observed in many NBFCs, financing, microfinance firms, etc., like farmer producer companies, self-help groups, or governmental organizations. So, in fact, one of the incubators that I'm managing, we were looking at, which has a farm advisory product. We were looking at tying up with telecom providers or internet service providers that would give them a beachhead market to go into without facing the operational issues that typically startups in this sector face. The second bucket of the thesis that we have is the post-harvest segment. Huge inefficiencies, overcrowding, and a fragmented market and a complicated market supply chain makes the perishable sector in this bucket especially vulnerable. One example is that the $100 billion horticulture sector, which is considered a perishable good, witnesses about 30 to 40% post-harvest losses in India. You can compare this to developed economies where it is controlled and it is basically lower than 10% in those areas and in nearby geographies. Given a growing middle class and economy, the opportunity to eliminate these efficiencies has led to more than 40% of total investments in the agri sector in this particular bucket. Some of the examples of innovative startups that are coming in this area are farm to fork models, tracing, marketing, post-harvest loss reduction techniques, like Mr. Anurag Agarwal has pointed out with New Leaf Dynamic, sorting and grading and quality assessment innovations that have recently gained prominence in this sector. So at Social Alpha, in the past 4 years of our existence, we have evaluated over 500 early stage startups, and which has culminated in several seed stage investments, one of which is, of course, New Leaf Dynamic. While this sector is still riskier for traditional VCs, we are seeing increasing proof of concepts being established for mainstream capital to explore this. One of the main challenges in this sector is to streamline the whole lab to market or idea to market ecosystem that is there. This makes early stage incubators quite critical in their existence, as it provides the correct market feedback from early on users, partners, stakeholders, implementation partners, access to quality R&D infrastructure, mentorships, etc. Apart from the seed stage investments that are necessary for the startups that are able to figure out an initial business model to go on field and try it out. The later stage investors also, as we observe in this space, are also more comfortable looking at entrepreneurs that have such support ecosystems, such incubators in place. And I feel that this trend is going to continue and grow. In my experience, evaluating startups as a portfolio manager and raising funds for the existing portfolio companies, one significant issue is the limited availability of financing instruments. And of course, the another one is access to working capital for asset heavy models. So there is a huge scope of overall investment community to try out different and creative investment models. To give you a perspective on this, in fact, convertible notes, which is a traditional instrument in the United States, has only recently been implemented in as late as 2016 for Indian startups. I would foresee a growth of novel financing mechanisms in the near future. Some of the ideas that are being toyed with are implementing profit or revenue sharing models in a way that is quite efficient, mezzanine financial deals, venture debt, blended financing instruments, etc. This is especially necessary since, given though there is a huge market and need out there for asset heavy startups in the sector, cold storages, food processing, pumps, etc., they are not able to scale due to limited access to working capital, and in many cases get heavily diluted during initial round of financing to even finance their existing POs. So this is a big challenge, and I'd like to know, interact more with other co-panelists and people around to find out a way where we can address this particular issue and see if we can work together or collaborate on this. Even though with all of these challenges, the agri-tech investment sector comes with significant opportunities. And we believe the total investments in the agri-tech sector would become $1 billion soon in the next 5 to 6 years. And I would love to hear more regarding that as well. Some of the portfolio companies, to conclude this particular segment, is the ones that we have invested in is a solar pumping startup for smallholder farmers called Khetworks. The technology of which was developed at MIT in the USA. The other one being, of course, New Leaf Dynamic at the post-harvest stage. We have an innovative waste to feed startup called Krimanshi that is operating in the western part of India and is up for financing for its later rounds. So to give you a flavor of the kind of deep tech startups we see. Thanks. That's all from me.
Thank you, Ganesh. So we'll open it up for questions and answers with all the three panel members. So we have a lot of good questions from the audience, and one of our panel member, Hemendra Mathur, has already started answering the questions. So give me 1 minute. Yeah, so this first question is for Social Alpha and Omnivore Venture both. Do Social Alpha and Omnivore Venture invest in farmer producer companies? Currently, Government of India is promoting a lot of farmer producer companies.
Mark, can I go first?
Yep, sure, Mark.
Yeah. So basically, the mandate that we have is to support a startup, and farmer producer companies is kind of an institution. So we don't have any precedent or any current, likelihood of going forward in investing a farmer producer company. But we do work with a lot of them for sure. For example, a lot of our startups actually require access to implementation partners, and farmer producer companies, in fact, is that intermediary organization that I was kind of speaking of earlier, that provides a great platform without a lot of operational issues that a startup need to face in order to introduce novel technologies and business models over there. So we are open to working with them, connecting them in the general ecosystem of NGOs we have and potential funding partners, but we don't invest or incubate them as such.
Yeah, Mark?
I agree with that. We certainly don't invest in them. They're a partner for many of our startups, and feeding in to startups that are doing market linkage, or even for startups that are trying to bring new technologies for advisory or inputs to market. What I would say is that I think increasingly in the future, you're going to see food processing companies and farmer platforms even helping to set up FPOs to benefit from that structure. So we'll have to see. Many farmer platforms, whether it's DeHot, whether it's Aqua Connect, and there are certainly others, in a sense, do many of the things that farmer producer companies do. Where farmer producer companies struggle in India is they lack funding, and without trying to sound too harsh, they lack talent. Right, so you have some examples of amazing farmer producer companies, right, like Sayadri, and there are a few others. But your average farmer producer company is run by a 23-year-old BSc Agri with no work experience, right? It's in general, they are severely undercapitalized in every way possible. There's a lot of potential there, but the same way the cooperative sector in India was built with talent, right? Verghese Kurian actually created a management institute, IRMA, to create so that he could have more managers to build out the dairy cooperatives. The FPO space desperately needs talent infusion.
Thank you, Mark. That's a really good point. Yeah, we need more human capital in the farmer producer sector in India, FPO sector in India. Next question is for all three of you. I would love all three of you to answer it. So how do you see the scalability of the AgTech solution to the marginal farmers? Because 85% of the farming community in India is marginal farmers. Even Hemendra has commented.
No.
But how?
85% is small and marginal.
Okay.
I will push back on that question very simply. I think in general, there are sort of three groups within Indian farming. Obviously, when you're trying to generalize 130 million people, it's pretty hard. You've got the top 15%, okay, what are called semi-medium, medium, and large farmers. They have 15% in their numbers. They own 50% of the land. Quite a bit of AgriTech is addressing that group. And anyone who says, oh, that's shocking, well, guess what? When Apple went out to sell iPhones, they didn't start selling them in slums. Okay, you bring a new technology to market, oftentimes you bring it to the people that can afford it. And the people that can afford it are going to be the people that are more progressive. You're going to have larger farmers by acreage, but you're also going to have small farms that are in high value crops like banana and pomegranate and grapes, tea, coffee, many other examples of that, or in spaces like aquaculture, which are very highly profitable. So that's the first group. The second group is you've got, right, so top 15%. Then you have the next, 45, 55%, right? And that's being addressed by a number of these technologies that are trying to build out farmer platforms. The 400,000 farmers on DeHat, right, are small and marginal farmers, right? Mostly small, but also some marginal. But the thing that I will always push back on is when people say that agri-tech startups need to address the needs of the bottom 30%. And what I would say to you is, look, that stuff is very mid-2000s, bottom of the pyramid bullshit. Okay? Yes, there are opportunities. Yes, there are some ways to address those groups. But many of those people are among the most desperately poor subsistence farmers in the world, cut off from markets, cut off from commerce. And if you think that agri-tech startups are going to suddenly snap their fingers and fix 3,000 years of oppression, I think we need to ask what governments are doing. I think that's where the nonprofit sector has to step in. This idea that private commerce is going to solve every social problem is very 15 years ago.
Great. That's a great point, actually. So I have one last question.
Right.
Before
Avinash, I would also like to add a couple of things, and I think it makes a lot of sense with regards to the argument that Mark gave. And in fact, a lot of times that instead of selling anything other than capital, which is the basic necessity of a smallholder farmer to make through the next few months, is an effort. If not in futility, it's very tough to achieve. So the only way is to look at, in case if there is a patient capital or if there are people who are willing to kind of address this particular market, is to go through channels that have some kind of blended financing options present, and the scale of the whole thing is kind of collectivized through either farmer producer organizations or maybe using some kind of governmental structure over there. For example, let's say remote sensing. Clearly, it's not going to, a farmer is not going to face just for the advisory that how he needs to farm or whether soil moisture in a particular in his field is lower than what it was yesterday and he needs to irrigate. So those are the things that are not on the top priority of any small or marginal farmer that is present out there. But in case if this is bundled at a village panchayat level or a FPO level, maybe these things can benefit the farmer going ahead.
Great. So thank you, Ganesh. One last question. So this is for all three of you. As investors, how do you quantify the risk premium of investing in AgTech in India? And Anurag, as an entrepreneur, do you think investors are doing a good job in quantifying the risk premium? I would let the investors go first and then the entrepreneur.
Sure. All I do is invest in AgriTech in India. So the risk premium is what it is. This is what this is what I've spent my life working on. It sounds like a very MBA. What's the CAPM model for AgriTech investing? I think when you unfortunately get out into the world of finance, you will discover, especially in the space of VC, there isn't that much data to even calculate, right, what the beta is, what the risk-free rate should be. And in general, I can tell you that as a category, venture capital funds are sort of, for when they speak to their LPs, targeting 20% returns. So that may be a good proxy, but actual calculation of the specific risk premium, I used to work in finance. I remember how to do it, but it's something I have not done in all the years of running a fund.
Yeah, Ganesh or Anurag, what do you think?
Yes, yeah.
So completely agree with Mark. So basically the name social alpha is there because we are providing access to the risk alpha that is out there for sectors that need it. And the whole point of our existence is to show that while the need exists, there are innovative business models who we can de-risk to a point where commercial capital and venture capitalists can take over. So that's a game that requires a lot of patient capital and patient funding out there.
Yeah, so I would say that agriculture is a different kind of risk. We know that risk, and so it requires a different kind of investor to be able to work with companies working in the field of agriculture, and it's really a long-term play and a long-term risk. Thank you.
Okay, and I think we have one more minute and we can take a couple of really good questions from the audience. And so, how many AgTech? So, given your portfolio, companies depend on IoT or smartphone applications. Will scaling innovation depend on involvement from the public sector, telecom, or major internet companies? This is probably for both the investors.
Yeah, I mean, a lot of agri-tech companies in India are starting to work with Jio, which is thankfully looking at itself as a fairly open platform, but very keen on agri-tech. Historically, Airtel was not as receptive, but I suspect if Jio gets more active, they will as well. As for Vodafone, the hell knows if it's going to exist in 6 months. So we have the makings of a duopoly, but maybe that will change. In terms of public sector involvement, there is intense public sector involvement in agriculture and quite a bit of support for agri-tech. I oftentimes criticize the government of India or the states for various things related to policy, but their support of the agri-tech sector has been very, very strong.
Yeah, and for example, Airtel also has recently made some investments and is looking for startups. So is Jio. It has its own accelerator. So maybe this particular model of looking at building a platform with many of which telecom companies are trying to do with the recent investments that are there in Jio would come to a proper fruition only if the majority of the people, the small and medium landholder farmers, come on board. So that's clearly a strategy that's going to go ahead. And as far as the government sector works, there are public sectors like ONGC, EIL, etc., that are working to invest in startups. And looking at deploying them as well. And you have innovative models like T-Hub and state governments propping up with their own business incubators and access to funds, etc. That will definitely accelerate startups in this space in terms of reach.
Great. Thank you so much, Mark, Ganesh, and Anurag. This was a really great session. I wish we had more time and we could speak more. Thanks to Hemendra Mathur also. He was actively answering the audience questions on chat. Thank you so much for being here. It was a pleasure listening to you and your perspectives on India. Thank you so much.
Thanks, everyone.
Thanks.
Thank you.
Thanks.